Good morning, guys or girls. Welcome to my channel. I don't know where you are in the world, but right now it's 4:30 in the morning East Coast time, and I welcome you to my channel. Today I made a video already once regarding my progress in one of the opportunities I'm involved in, and decided to make another video, totally different topic. Technical analysis, and specifically I'm going to focus on crypto today, but all these ideas and concepts can be applied to various either stocks, forex pairs, crypto. It all is you apply the same strategy when you're doing the analysis. So before we get started, just make sure you if you click on my videos and you're watching my video right now, if you're interested in following me, make sure you click the subscribe button, click the little bell, and you'll get an email every time I put out a new video. Underneath the video, make sure you click the show more. I give you a quick little description of what the video is about. I talk about the different topics that can be requested in comments if you want to hear about something else. Some actions you take based on whatever I'm showing in this video. If it's for the opportunity, here's the sign up link. I ask you to please like, comment, and share my video in YouTube. You can connect with me on Facebook. Once you get started, again, I talk about the opportunity. There's a special group that we created on Telegram for the trading software. If you decide to get involved with trading software, these are the ways to get in touch with me. This is a disclaimer, and I'm actually going to follow up with another disclaimer in a few seconds here. And then these are other videos that are related to the video that that you're watching right now. So if you look in the description below, there might be others listed here with information regarding the same opportunity or same topic that you can go and watch. And then here, this is just to see if maybe this will help in terms of YouTube to elevate the video to get seen more. Trying this out. I used to do this. I think it actually helps, but I think the most important thing is the likes and the shares. So please, if you like the video, please like and share. And I also do believe the written content in the description helps for keyword searches. So I'm just trying to get my videos seen a little bit more, get the YouTube channel going again. Like I said, I was on a little bit of a leave of absence, so to speak, for a while. And now I'm back. I want to continue to make these videos, make them so that there is value and information for you guys. So please, I really welcome any comments in the comments and feedback and topics that you want to hear more about. So today I'm going to talk about technical analysis, and I want to share my trading view screen here with you guys. Let me just increase this a little bit so you can see. And, don't get scared. If you're new to crypto markets, there's always ups and downs, and there's always going to be fluctuations in profits. I mean, in price targets and things like that. So I strongly advise you to dollar cost average into positions. Put it this way, if you have $1,000 and you want to go in and buy something, don't buy it all at one time. Buy maybe $200 at a time and do 5 different buys over a certain period of time, and average in and create an average price for yourself. Again, like I said, I almost forgot, but I want to make sure you guys are also aware that what I'm sharing here is my thoughts and my ideas and my analysis of charts. So this is in no way should be expected as financial advice. Please pause the video and read all these bullets I have here. In the end, you're going to be responsible for what you do and what you buy and what you get involved in, and you got to decide what your risk tolerance is. And if you really want some real advice from a certified person, you need to search out and find a financial advisor and talk to them. I'm not a financial advisor. I'm not certified. I don't want to portray myself as being one on here. I'm not even an expert trader. I'm just a person that's been involved with trading for a while here. I've learned some skill sets. I've learned to use some technical analysis and tools on charts that seem to play out over and over again. So I strongly advise you to learn some technical analysis. You'll see a totally different picture when you're looking at the charts, and you won't be just buying just to buy, and you'll wait for the price action to fall into your trap or the trap that you set, and you could take advantage of that. So but again, watch, you could watch this video and take away what you take away, but in the end, you are on your own when it comes to doing the investment. You are on your own, and you got to make that decision to buy something, sell something. That's all on you. All right. So I'm just sharing what I know. Take it for what it's worth. Use it as you see fit. Follow some other people, and by following a bunch of people that do this stuff, you can start learning the skill set, and that skill set will never be taken away from you. It's one of the best methods of creating money for yourself. You're in control of your own money. You can buy and sell and withdraw and do all that stuff on your own. That's all in your control. So it's a great way to earn some extra money on the side, or if you really become good, you can actually do this full time. You could do trading and create enough income to survive off of and actually create wealth off of. All right, so what I'm showing you here is one of the hottest cryptos right now. It's called ADA. It's Cardano, and it's done a massive run. I mean, honestly, I'm in it since 2000, way back when it was 10 cents. So see, this is my average cost right now. This is where I got in, and I've been in it for a while. But it's done a massive run now, and it's we had that crazy spike down here on a daily time frame. When all that crap happened about a week ago, it went down as low as 16 cents. So if somehow you had some buy orders in here on a low number, you might have gotten in, and you might be up huge right now. This wick happened pretty quickly. Let's see if I could. Here it is right here. So if you look at this wick, a wick is like when the price goes down and then comes back up and it closes. So it shows that the price action went this low but came back, and then it still closed lower than the open. So it opened here, closed here, so that's why it's red. But during the open, it went up a little bit, and it went all the way down, and then it finally, at the close of 15 minutes, it closed here. So this is what that candle looks like. If you go down even further, you go on a 5-minute chart. Right here. You can see this happened, pretty quickly on a 5-minute. It did it within 5 minutes, but it was pretty low. So you might have had a chance to get in if you had some limit orders set this low. And if you did, you're doing pretty good, and like you're at least up probably at least 100% if you got in somewhere over here. All right, so but regardless of that, what I want to show you is things that occur over and over again in these charts. All right, so now right now I'm on the 1-minute time chart. Let's go back here. You can see some of my wedges and things that I'll talk about along the way as well. But one thing I really want to talk about is Fibonacci. Fibonacci has been my go-to technical analysis indicator on the charts that really help you understand where price action is. Now, you don't want to go against the trend. You want to trade with the trend. Right now this is in an it's in a bull cycle. It's in an uptrend, and I mean, you could even see here where Elliott Wave is coming into play, right? That's another technical analysis tool that you can look at. But what I want to show is time and time again, if you pick a low and you pick a high, you can see time and time again anywhere from 0.382 to 0.65 price action changes. So what typically happens in an Elliott wave formation, if the first wave has a small retracement, which means it doesn't go down, to 618 or 65 or 786. If the first one is small, the second one is usually deeper. So at a high level, in terms of Elliott Wave, you can see here. Let's see, where's Elliott Wave? Right here. So if you start charting out the Elliott waves, that's wave 1 to 2. This is 3 to 4, and now we're going into the 5. And you can see typically wave 1 and wave 4 typically don't overlap much. Wicks are okay, but if you start getting bodies over here, then this Elliott wave kind of falls apart. But what you can see here is that this was a smaller, lower retracement. This one was only retracing. This one only retraced 50%. So this was, in terms of retracements, anywhere. I mean, honestly, it's a little deeper than 38.2. Typically, it'll stop at 38.2, but it went down to 50%. And a lot of algorithms and a lot of people play off the 50%. Anywhere between this zone, is a typical place where people look for retracements in the price action to get into a new position. So, if they call it laddering or cost averaging. If you're sitting here and you're watching the charts and you find a pivot low and you pivot high, and then you start watching it retrace, somewhere between here and here is when you start putting in some positions. And as I said earlier, if you have $1,000 to trade, maybe you start buying in somewhere over here, and you buy 20%, 20%, and that way on the way down you'll get in, and if it takes off, then you don't want to start buying above your first entry, but at least you'll have some skin in the game, so to speak, to ride the wave up. Now, what you typically do on a wave in a retracement is, once you figure out where 0.382 to 0.65 is, then you want to see, okay, what is the possible target to 3? So to do that, what you do is you actually use a tool called the Fib Extension. Trend-based Fib Extension. So then you pick the low to the high and then to the retracement, and then to make it easier, you kind of drag it out over here so you could see things. Now, most of the time, people talk about the the 0.414 or 0.68. That's a typical wave 3. So the distance between the distance it's gone from wave 1, from the initiation to 1, if you take that and you extend that, you typically see at least a 1-to-1. So as you can see, it passed a 1-to-1. So at a minimum, wave 3 has to be equal to or longer than wave 1. So from 0 to 1 has to be equal to or smaller than wave 2 to 3. So if you take that into account, you can at least have an idea that, okay, price action should come here. And then a lot of times it'll go higher. It'll go to 0.414. Here we missed it by a little bit. So somewhere after 1 to some level higher is where you should have considered taking some profits, maybe 50%, something along those lines. With the idea that maybe it'll go this high, but you never know. So what you should do is, if you got in down here, as price action pulls away, for sure you should put your stop loss equal to your entry price. Whatever your average price is, you should set your stop loss equal to that, and a little bit more to cover fees. But that way you guarantee yourself a guaranteed profit and no possibility to lose money. And then at some point, as it's going up, just like you got in on an average, you average your way in, you should consider averaging a way out. Maybe set a target to get out at 1.0 for 50% of your position, and then as it starts hitting these other Fibonacci's, maybe take 25% here, take 25% here, and then call it a day. but realize that anything that goes up is going to come down. So as you hit that, hindsight's always, the best, right? You know exactly what happened because you could see it on the charts. But when it was happening here, you didn't know how high this is going to go, and if you took 50% profit and you locked yourself in at, break even, you can see here that right now you're safe. It still didn't come all the way down, but what you do is that now you're out of 50%, and now you're sitting on the sidelines with that 50% that you locked in. And now you can consider, okay, well, this is the pivot low and this is the pivot high. This one retraced, shallow compared to, shallow. So the next one typically, when you're up here, when price action's here, you can have the idea that maybe it'll come as low as this level right here. That's typical Elliott Wave, where the retracement can be as low as the peak of a wave 1. So if you put that in mind, you can have, a box here, when price action is still over here to your left, and it's up here and it's starting to come down. This is where wave 1 peaked out, is where you could be looking to get in again. And watch this. I'm gonna take this away so it's clearer. But watch when you put the Fibonacci retracement on this second wave. So this is the low pivot. This is the high pivot. And like I said, if you were looking for an entry, most of the time the next wave will come down to the peak of here. So look what's here. This is the 61865. Look how it came down and touched it exactly. This is considered a deeper retracement. Now, sometimes in a bull run, they don't retrace as much, but really anywhere from like 50% down to 618 or 0.65, the golden corner, is where you should be looking to possibly re-enter. So if you would have gotten out up here on your last position, now you have some more money to put back to work with you after it retraces. So you would possibly come in for another entry down in here. And then from here, what you do to figure out the target, let me get rid of this. Now, what you do after, when this happens down here, now you want to figure out where this could possibly go, right? So what I said earlier is the extension from if this is a shallow retrace, this is typically deeper. Now you want to figure out, okay, where is this target, right? Where does this go? So to do that, what you typically do is do a Fibonacci retracement of the entire run. So you start here. Fibonacci extension, not retracement. Fibonacci extension. So you take the low, you go up to wave 3, then you come back down to 4, and you lock it in. And now from here, typical targets for wave 5 is either 414, 618. So this is where this, like based on this Elliott Wave, the only thing you can't tell is how fast they'll get there. And I'll show you another tool where you could kind of get a better idea of what's possible. But in the end, you don't really know when it's going to happen, but you just know what the number of the target could be. So, anywhere from 272 to 618 is a typical target. So, kind of make it realistic. Maybe it'll take until March 3rd. It's only March 3rd, so it's probably going to, like, if you think of the slope that you have here, kind of repeat that slope, assuming it'll take the same trajectory higher. So maybe by, March 5th, if this plays out the way it's showing here, it could be a price target of $2.10. So that's, a little bit under 100%. If you take the measured move of where it is right now to where it can go, it's a 62% move. So this is how you kind of lay out a trap. Like right here, you're waiting for this to come down into those numbers that we talked about, between 5.5 and 6.65, and that's when you're waiting. You're waiting to get in down here. And another way for you to kind of get a better idea of how price action can happen here, you can use something called a pitchfork. It's not going to be great for everybody, but I'll show it to you. That way you can kind of use it for what it's worth. But pitchfork kind of gives you a better idea of a timeline that you can kind of figure out that might happen. Let me just get rid of all those extra lines. And to get a pitchfork, you usually go, it's the same tool under Fibonacci. You pick the pitchfork, and what you want to do is you want to start down low, hit the high, and hit the low. Basically, before you have to add, you don't want to add all these, but these can be added in case price action moves out of the channel. But these are the high important ones that I show. And what you do is you wanna kind of move this around. Let me just get rid of some of this extra stuff. You want to move it around so that you could kind of put the edge, somewhere where it seems to have actions. So if you zoom in here, you can see that it bounced off of here. Then look, it touched that one. It came down. These are fib lines in the pitchfork. But what this will show you is the possibility that if this stays true to staying within this channel based on this pivot high to pivot low, you could kind of like figure out, okay, where does it have to go to, can it go this high and stay in there? Can it go here? Now I forgot where the target was. Let me do the Fib extension again. So if you're assuming a 614, 214, a 414, then you know that it might, if it's gonna work its way higher, that you have to make the assumption that it's gonna bounce maybe off of this as the new pivot high. And if you think it's going to go to 618.618, then it might be here. Now just realize, like within this path higher, you're going to have another set of Elliott waves that are going to work on themselves, and you're going to continue to to have these things happen where it's fractal. So even though this is one leg, within that leg you might have another smaller Elliott wave, 5 wave, and then you might have an ABC retracement and all these different things that could occur to get to that final bigger at a bigger level. In fact, if you click on this, you can make this a minor, which means that it's at a lower level than the big one. So that just means that from wave 4 to wave 5, there's another 5 wave Elliott within that one wave, and it's all fractal based. But my whole point to you is that you can use the Fibonacci retracement and the Fibonacci extension plus the pitchfork to kind of lay out possibilities on when it can get to these levels. If you're looking to get out, maybe it's going to go to 1 and then retrace. That's realistic. Or it could go to 1.272. So you can kind of get a better idea of like what the timeline is, but you'll never know. It could be an impulse just like this. You never know. But these 3 right here are the typical short-term extensions to this Elliott wave for it to finish. So once it hits wave 5, then you typically see something called an ABC. Correction. So you normally see something along these lines. Where price is peaked out. Sometimes you get a double top, or it might go a little higher. But then the C wave usually comes back down. So what you're going to do is once this pivot happens, and you're going to put another, you're going to put another Fibonacci on this leg, and you're going to figure out where 382 or 65 happens. For example, right here. Let's assume it hits 1. All right, so now you have a new pivot where you're going to take this to this. So when you zoom in, now you can kind of lay out a path to ABC. Now, if you think it's going to be a shallow retracement, then you know, oh, ironically, I put it right at 382. But you could kind of see, you know, based on this scenario, how this corrective wave might get to C. And then at C, what you're going to do is you're going to know the correction's over, and you're going to get into a new position, and then guess what happens? Another Elliott wave starts. Right, so now you got this to here, and then it retraces, then it goes higher, then it retraces, then it goes even higher. So this, when you start laying this stuff out, you can start seeing where price action is going. And again, this after this Fibonacci, after this Elliott wave to 5 ends, this pitchfork may longer not be usable. You might have to come up with a new high to low pivot and figure out the next channel that it's going to be operating in. You know, these pivots, this pitchfork will last a long time, but at some point they do break, and you know, and when that happens, you got to create a new pivot, a new pitchfork to figure out. One other thing that I'll mention to you is that algorithms a lot of times have targets that they're working towards, and one of the obvious ones are the negative 23.6%. So there's algorithms that are written and are operating to do trading automatically, and if the algorithms are in the long, they're pushing price action to get to their target. So as long as it sticks to the 65 and doesn't break lower than that, or even the 786 sometimes in crypto, chances are price action is going to make its way up to this 0.236. So that's another, you know, idea that you can consider. Like, for example, if you take this smaller one, you come down here and you do the one on the first, like when the first pivot happened, if you put the Fibonacci tool on here, you can see that it hit the 0.236 pretty easily. And a lot of times it'll even go to one, you know, the target will end up being -1, like 100% move, like this leg equals to the next leg, and that kind of goes in line with the Elliott Wave stuff that I talked about. So again, just some ideas and some things you could think about with technical analysis. Maybe I can let's look at Ethereum. Let's just take a quick look here and see what's on here. Just turn off some of this stuff. So there's a lot of indicators that you can get for free from TradingView if you decide to use TradingView as your tool. Let's go to 1 hour. All right, so let's go back here and let's take a look at this. If you look at this pivot high to this pivot low, you can see again, it typically starts reacting at the 0.5, and sometimes it goes to the 0.65. But the fact that it stayed where it's at, this pivot, since it's turned on the downside, there's a higher probability that it might come down to this number, which is basically $1,200. So right now, this, you know, Ethereum is pretty weak in terms of what it's looking like on the charts. So you know, what I was just saying now, if the bots are in a downtrend or in looking to sell it short, it's going to try and push this price down to this green. So this might be a reaction point where this might be where you look to see a change of direction and come back. One thing we could also check let's look at a higher time frame. All right, let's keep that there, and let's just take a look here from this low to this high. See how the 0.55 and the 0.5 is almost aligning up to this negative, this green line. This is the negative target for the price, and then you can see price actions almost at the 0.5, but you know, it's this confluence around this area. So if you start charting this, this is probably where we'll see a retracement down to, and within this green box is where, if you're looking to take positions, this is where you would start averaging into a position for the idea that this will move higher after it hits this retracement, you know, with this green target up here, which is $2,393, so basically $2,400. So on a bigger scale, if it follows the Fibonacci retracements, if it, you know, this was a deep retracement, so the next retracement is going to be shallow if the trend is strong. And then I'll keep the Elliott Wave. So right now this is Elliott Wave 0 to 1. Right now we're into 1 to 2. And then so if 0 to 1 is equal to the next one, what you do is you take this to here. So that's the length of 0 to 1. And if you're assuming it's going to come down to the 0.65, you can see, you know, there's some correlation to these targets up here, you know, and maybe it doesn't come down that low, you know, maybe it only comes up to there, and then maybe you're looking at a 28, you know. You just got to see when reaction happens down here within this box. And if, you know, depending on what happens, I mean, there has been cases where this is the important area where things turn. So look at that. Like if it happened to go down to 78, look how it's pretty much hitting the algo targets on the high side, right? 2393. So this is a 1-to-1 extension, right? This you know, AB is equal to CD. So wherever this pivot happens, if it happens here, then price action is going to go higher. If the change of direction happens here, then we're going there. If it happens down here, then realistically, this is where I really think that at a minimum it can go as low as, oh man, that's dangerous, 870. Ugh. I really don't see that happening. I really, you know, 1200, between 1200 and 1100, like somewhere around here is really where I think it's going to stop. I mean, look at all this action here. That's where there's a lot more price, you know, sideways strength happening right here, and you can see even right here, you know, with all these wicks higher, this was resistance, and now it's kind of looking like it's turning into support. So, you know, you got to just wait. You got to wait for it to fall into the trap. You know, 0.5, like I said, 0.5 is a typical entry point, and it's kind of marrying up to the support line here with all this action. So realistically, you know, this right here, that seems to be a pretty good support range. And you know, unfortunately, you may never get exactly 0.5. So somewhere within here, I feel pretty good that this might be bouncing off this range. But again, you wouldn't want to go all in here. You want to just buy a little bit and see what happens. You know, don't put all your eggs in one basket in one buy, because you might have to buy again. You know, you might want to buy again when it hits 0.618 or maybe 0.55. You know, 0.5, 0.55, 0.618, and 0.65 are all very popular entries to a pullback. So right now we're down 35%. And I've heard on YouTube that it can go down to 40%. So 40% would be 0.55, ironically. So, you know, this is something to consider. That typical retracements on the way up for Ethereum has been anywhere from 28% to 40%. So, I mean, if it does what historically it's done, it probably can go as low as 1,221. So this is where I would be looking for an entry if you are interested in getting involved with Ethereum based on this pullback. I already have all my Ethereum that I'm going to have right now. Right now I'm looking for weakness in a Cardano to add more. I really think they're both going to do well. I think maybe in the longer term, there's a chance that Cardano could reach prices much higher than it's at right now. So I think if you're thinking longer term and possibly into the next bull cycle, Cardano is certainly something you should consider maybe building a position with. And again, don't go all in. Do dollar cost averaging. If you don't know what dollar cost averaging is, go on the internet, go to Google. Google is your friend. You can Google it and check out what Google has to say. And basically it's just buying a certain amount on a periodic basis no matter what the price is. And if you check out some research online, they'll show you that anyone that has dollar cost averaged into Bitcoin over the longer term has always been in profit. Now, that doesn't mean you're going to be in profit next month, but if you do it and you consider it, think of it as like a 401k deposit that you take out every week or every 2 weeks or whatever you get paid, and you don't even think about it, and it's just there. In the longer term, you're going to find yourself doing very well with, as long as you stick to the high end, I guess if you want to call them blue chip cryptos, such as Bitcoin, Ethereum, Cardano, Chainlink. Those are all good ones to just kind of just stack them up as much as you can over time, and they should treat you well in the longer term. All right, so with that being said, just wanted to change gears on the channel a little bit, show you a little bit of a technical analysis. I know I probably went fast for people, so if there's something that I said here that you didn't understand and you want me to make a specific video to talk about the specific topic, let me know. This was just kind of, getting back into showing you guys technical analysis. And again, not everybody knows technical analysis. People know more than I know. I didn't even talk about divergence and all these other RSI and all these other things you can do. I'm keeping it very simple, just support resistance lines, Fibonacci retracements, Fibonacci extensions. I wanted to show you the cycle of the Elliott Wave thought, where you can kind of see where we are. Right now we are in the 1-2 in terms of Ethereum. So, Ethereum could go much higher if it's a 1-to-1 extension. Some people call it AB is equal to CD, and if you do the same, if you assume that it's an Elliott Wave pattern, the second leg has to be equal to or greater than the first leg. So at a minimum, if you figure out the length between these two pivots and wherever it changes and starts going back up, you can assume that price action should, if it's sticking within the Elliott Wave requirements, will at least do equal length as the first leg. So that's a way for you to kind of figure out where price action could go. And again, this is all going to be dependent on when this stops and when it's going to turn back higher. So the lower it goes, like I said, I'd hate to see Ethereum come down to 900, but with this other algorithm target that we have based on these pivots, it's kind of scary, but this is where the algorithms are going to fight to get price to, and they're going to continue fighting until it hits here, and then they're going to have a position built, and then when it goes here, they're going to start selling. So it's just something to consider. Again, you got to do what's good for you. You got to make your own decisions, but I wanted to share some of this information with you. TradingView is an awesome platform to use for charting. They have a bunch of free, all this stuff is mainly free. The only limitations you have, I think, is how many different things you can use simultaneously on a chart unless you buy it. Every Black Friday or around that area, they really put out a good deal to buy the packages. So maybe go month to month until you get to that point, or you know, if you buy a year now, or you buy whatever subscription you decide to buy, you can always add that bonus one when it comes around. And it just tacks on an extra year. It's not like, you know, you're not replacing what you have. You already have what you have, plus you'll get the cheaper rate for the next year. And then from there, you could just buy every Black Friday to continue your subscription. But this is a really important investment that you make in yourself if you're going to do trading. It'll allow you to, you know, publish charts, keep charts, and allow you to figure out, you know, what's going on. There's a bunch of other things that I didn't even talk about. There's, you know, in terms of trading, there's wedges, and there's triangles, and there's a whole bunch of different things. I don't know if I still have any of that on here. I think unfortunately, I might have deleted a lot of my previous trades. But you'll see over and over again within the charts patterns that will show up. And those patterns, if you're going to do short-term trading, you can trade those patterns as they break out. For example, let me see if I see one here. Well, this is kind of one right here, sort of. Not really. This is more, well, kind of. I'm going to show you this real quick, and then we're going to call it quits. So you can see price action hit this a couple times, and it was trying to find its way to go higher, right? And then you could also see over that period of time of it trying to go higher, price actions retreated, but retreating less each time. And then finally you got the breakout. Now, if you take a trend line and you draw it on the bottom here, something along that lines, you can kind of see that this is forming a ascending triangle. You know, what you want to do is try and have as many crosses as possible, as you know, get close to the body as you can, but also include wicks where possible. So this would be the upward going trend line, and then as you can see, it broke out here. But what you would do is you would extend that there, and somewhere around 80% of the distance in this ascending triangle is typically, it's higher probability that it's going to break up to the upside since price action is increasing on the top, and lower percentage it's going to break down. And you also got to play the fact that it's a bull run, it's an uptrend, all those kind of things. Now, if this was flipped the other way, then a higher probability for it to break lower. Now, what you do is you follow this pattern, and you don't want to trade while it's inside this pattern, but you want to set alarms, and you can set alarms in TradingView very, very easily. You can set alarm on a trend, then you do 1 per minute, and you want to cross up, and then you hit create. And when price action blah 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 breaks out, you'll get an alert saying, bam, all right, price action's above this line. Now I should come and look at my charts. So at that point, you know that it broke up. Now you want to wait for a confirmation. Typically after one candle, it's safe. And then what you do is you would enter a trade, and then you would put your stop loss, you know, a little bit below this trend line, because now this is resistance, 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 resistance. Now you're going to assume that this becomes support. So if you put it just below support, you won't get stopped out. But if things turn bad and it goes south, you'll still, you know, save your account. You won't get blown. And what you do to figure out targets on these kind of patterns, you go and you take a trend line or a tool, and then you just draw from the peak to where price action hit down here. So basically from that high down to, you know, where it hit the bottom here. Then you take that and you place this in the point of breakout. And I mean, as you can see, it did much better, but you can see that the target, you know, it went up. You got a little scared because it came down, but it didn't come below this line. It wouldn't have stopped you out. And then it came back up, and then it hit your, if you set this as your target, then you're out. You know, or what you could have done is you could have continued to move up your stop loss, but chances are if you would have done that, you would have got stopped out here. But as you can see, it went much higher, right? So these are high probability targets, patterns, and you don't want to trade until the breakout happens. So you wouldn't have been in the trade until somewhere over here, right? So you would have made a decent amount of money, but again, the important thing is not to trade inside here because you don't know which way it's going to go. You know, other things that kind of help you is the moving averages and things like that. You could start seeing where it bounces off the moving average. You know, unfortunately here it's a lot of crossing, so the moving average on this chart is not really playing out to help you. But again, if you find these patterns on the chart, you put it on there and you wait for it to happen. And by setting this alarm, it would have alerted you. Maybe all right. So maybe you wouldn't have wanted the alarm here. Maybe you would have wanted to create a new line, and just under this, like as it's approaching it, maybe you would have wanted to be alerted at that point. You know, so that you could come to the chart and you could see what's going on. You know, you don't want to come in and after this move. This is on a 4-hour move, so you would have had time. And in fact, chances are you would have been drawing this on a 1 hour or so chart. The higher the time frame, the more probable that the chart patterns will play out. As you get lower, the price action is a little bit more chaotic. So you really want to stick to higher time frames, at least 1 hour for these patterns. And then, like I said, if you would have set this somewhere over here, then you would have been here. Unfortunately, you would have been waiting for hours, though. I think honestly, on the hour level, you would have probably just wanted to actually see the breakout instead of sitting here for 5 hours waiting for something to happen. All you're going to see is action going back and forth here. So in that respect, you probably would have just you really want to just see it when it actually does happen. So you would still have time here. This is like a 1 hour candle, so you would have still had time to get into the trade at this point. And then by measuring the width of the base, you could figure out what your price target should be. So again, just checking real quick here. If you did that, if you got in here, well, actually you would have probably got in somewhere around here. You would have made a good 20% on your trade if you're looking to trade. And there's leverage trading on Bybit and all these other sites. So if you want to make more than that, you could do 10x and make a whole bunch more. But it's high risk. You know, the best possible thing you could be doing is just buying it with money you have and holding on to it. That way you don't have to worry about leverage. You don't have to worry about you know, margin calls and all that kind of stuff. So, all right, that's it. It's another 47-minute video. Sorry, guys. But I think it's good content. Let me know what you want to see more of in terms of technical analysis on charts. This was a crypto-based technical analysis, but I could also show you on forex pairs if you want to get involved with that. I could show you some stuff on there. It just Fibonacci happens all the time, and once you start using that tool and playing the breakouts and the patterns and resistance and support, those are the core basics that you should get involved in and learning and understanding to be a trader. Now, you don't have to work, like if you get involved with the software that I have, you don't even need to know this. There's the manual trading software that I showed you already, but there's other ones that you just kind of put some money in there and the software works for you. You set up the configuration, you set up the settings that you want to use on the software, and then it does the trades for you. But it's not crypto based right now. It's forex pairs based. So I believe they're looking to do a crypto based option to those, but it's under development, so it's not a reality yet. So, but the point is, you could set up the software, let it run. It's not a set and forget, but it does its thing without you having to worry. But if you understand these ideas, it actually gives you even a bigger leg up and a higher probability trades in addition by knowing this stuff. So if you're interested, get in touch. Right, there's not going to be any links in the description of this video because this was just educational charting. So I can put my TradingView link in there. I don't know if I get anything from that, but I could put that in there if you guys decide you want to start TradingView. And from there, so just comment under the video. Let me know what you want to see more of. What technical analysis on what. Maybe you want to put a pair in there that you want me to look at for you, something like that. Again, I'm not saying I'm the expert, but I've been doing this for a while and I know what I know. It might be more than you know, and there might be someone else. There's someone out there that knows a hell of a lot more than I know. So just keep that in mind. Again, like I said, this is not financial advice. It's just educational, showing you how charts and Fibonacci plays out over and over again. And when you start using that, it's a different game. It's a different game. So take care until next time. I'll try and do another video tomorrow. Maybe there'll be additional updates regarding my new deposit and the other opportunity. But have a great weekend with what's left of it, and I hope you have a great week. Take care.